Right. So now we'll see the sources of finance. There are three sources of finance: short term, medium term, and long term. Short term is for how much time? Finance, yeah, less than a year. Less than a year is the short term requirement of funds, like you need to pay salaries, or you need to pay wages, or you need to pay tax, or you need to purchase raw materials. So that is the time you require short term finance. So short term finance you obtain from trade credit, you get it from deferred income, you get it from accrued expenses, commercial paper, certificates of deposit, letter of credit, installment credit, bank finance, factoring, and bill discounting. So, what is trade credit? What do you mean by trade credit? Trade credit is when the agreement is made between seller and supplier. That they make an agreement that the supplier who has supplied the goods to the company, he will give a credit period of 60 days or 90 days for the company to pay the amount. So that is known as trade credit. So this is very helpful for the companies. They can get that much time to pay back the supplier who has given them the raw material. Accrued expenses is the expenses which the company has already done, but they have not paid. Like for example, they must have used electricity for 1 month, but they have not paid for it. So that is accrued expenses. So that is a liability later on. Company has to pay that electricity bill. Deferred income is the income which the company has received in advance. So a customer must have placed an order and he must have paid in advance. So now the company is responsible that they should give him the goods. They should satisfy his order. Commercial banks are all these banks, private banks and government banks, who do lot of lending to the entrepreneurs. Each bank has its own schedule of how to do the lending. Bill discounting is where the bank will purchase a bill or discount bill without collateral security. They will pay the funds to their customer. What is collateral security? What do you mean by collateral security? When you take a loan, will you just get a loan like that from the bank? No. So what do you need to give? Yeah, you need to show property documents or some house document or something that is known as collateral security. So here in discounting, bill discounting, the bank is giving the funds to the customer without a collateral security. So how it is doing? It's the between the seller and the buyer, there will be a bill of exchange on the goods, purchase of goods on credit. This bill is given to the bank, and along with the railway receipt. That is how they'll do the transportation of the goods, maybe by train or maybe by truck. So whatever mode of transportation, they will show that receipt in advance, and they'll show this bill also between the seller and buyer, which has been drawn, and that based on that bill, the bank will give the funds to the customer, business customer. So that is known as bill discounting. Do you want to write down all these things, or you are okay? Okay. So, commercial paper is also a short-term instrument, debt instrument. Again, for fund requirement, the entrepreneur can submit this to the bank. And certificates of deposit is bank deposits. A certificate is made and it is given to the bank, and on the basis of that, bank will give the funds to the entrepreneur. LC is letter of credit, which is again a bank guarantee, where the bank will help its customers. Customer will be a seller. He would have he would have sold something to the buyer. So on that guarantee, there will be a letter of credit which will be honored by the bank. On the basis of that, they will give the funds to the entrepreneur. So this is mainly used in international trade. So factoring is also a way to get a short-term finance where the business will sell its invoice. It would have made an invoice, purchase invoice between the buyer and the seller, and this invoice will be given to a third party to get immediate cash. So it will be sold at a discount to a third party, and immediate cash the company will get, and the third party will collect the funds from the businesses customers. So that is known as factoring. Here the third party is known as the factor. So this is all the ways in which a new venture can get short-term finance. Now we will see medium-term finance. Medium-term finance is usually for a period of 1 to 5 years. So companies require medium finance again to purchase assets like machinery and all. So how do they raise this fund? How do they get this finance, medium-term finance? From debentures, from shares, from borrowing from commercial banks, and from public deposits. So it may be for diversion of the company, expansion of the company, or it may be for purchase of fixed assets, or it may be for upgradation of technology. So medium-term finance is bought from financial institutions like LIC, Life Insurance Corporation, State Financial Corporation, from Industrial Development Bank of India, and there are commercial banks also, which is giving a lot of money to entrepreneurs to encourage them. They may give short term, medium term, and long term loans. Public deposits is deposits done by the public, that is also used by the companies, given to the companies as a medium term finance. So higher purchase is where a company will a new venture, it will hire a costly asset which it cannot purchase. So it will hire that costly asset, and during that period of hire, it will pay for that asset in small amounts, in installments. So by the end of the last installment, it will become the owner of that asset. So that is also a means of getting medium-term finance. And lease financing is where again the company is taking on lease. It is taking an asset, but here it's not owning it at the end of the rental period. It is only paying the rent, and it cannot own it. So leasing is good for such companies who want to hire costly equipment which they cannot purchase. So if they want a costly equipment for a short period of time, then they'll go for leasing, lease financing. So these another way is currency bonds. Currency bonds is where foreign companies and domestic companies, they will issue currency bonds for a period of 9 months or to 30 years, and these currency bonds are issued mainly by government, and they are popular among the investors because the rate of interest they offer is very good. And installment credit is again the installment, like how we pay our EMIs. When we purchase something every month, we are paying the EMI on whatever we have purchased. So that is installment credit. So the repayment period, during that time, we are paying the principal amount plus the interest, for which is known as the EMI, equal monthly installments. So these are all the ways in which you can get medium term finance. Then we'll go for long term finance. Long term finance is 5 years and above. When company needs funds for 5 years and above, maybe 10 years or 20 years. So again, maybe construction of buildings or purchasing land. All for all those reasons, they may require long-term finance. So how do they get this long-term finance? What are the sources? Shares. The company will issue shares, and the shareholders will become part owners of the company. So like that, they can get long-term finance. from the shareholders. Debentures is also a form of raising capital quickly. It is an unsecured bond, so where the investors become creditors of the company and they receive interest and principal payments. So debentures are a safer option compared to shares. So it is not like shares may sometimes the stock price may fall down suddenly, or it may go for a loss. So compared to that, debentures is much as a safer option for the customers to buy and provide long-term finance to the new ventures. Term loans is again long-term loans which is given to the new ventures. They can repay it for a long period of time. So lease financing is again they take equipment, maybe costly equipment on lease, and during that lease period they will pay the rental only. They will not make the payment for the goods, so they will not end up owning the equipment which they have taken on lease. And venture capital investing is also a very good source of long-term finance. Venture capitalists, we have already discussed in our entrepreneur presentations, like Ratan Tata and Sudha Murthy. All these are venture capitalists. So if they see a startup which has promise of growth, which will grow very well, then they will invest in that. They will put their money into that. So these are all the long-term finance options. Now we'll see what is the institutional support for entrepreneurship. So from the government side, central government side, you have Khadi and Village Industries, Small Industries Development Commission, National Small Scale Industries Commission, Micro, Small and Medium Enterprise Commission. Then state level also you have DOI, Directorate Industries, Small Industries Development Corporation, and there are other institutions which are known as incubation centers. What is incubation center? What is an incubation center? Have you heard of incubation in hospital? What is done there? Incubation in hospital. What do they do in incubation in hospital? The premature babies will be put there and they will be taken care of till they are reaching the normal growth state. Same here, incubation center means they are putting the ideas of the entrepreneur and they will plan the business plan and they will decide how much resources and how much funds and all is required, what is the total cost of the project, everything they will develop that idea into a feasible business, a feasible business idea. So developing a plain idea into a feasible business idea is what they do in incubation centers. So there are many incubation centers like Rural Development and Self-Employment Training Institute, Venture Capitalist, Maker Lab. All these are incubation centers where anybody with a good idea can go and approach them and they will develop that idea into a feasible business option for you. So there are many government initiatives like Make in India, Startup India, Skill India, Digital India. All this you should read for your exam, because most of your question papers I saw there are questions on all these government initiatives. Almost every question paper they are asking Digital India, Make in India, Skill India, all these Pradhan Mantri Kaushal Vikas Yojana. So you should know about these schemes. Most of the question papers I saw this. They had asked about these government initiatives. So these are all the government initiatives